8:31, everybody. The clock is ticking on getting your taxes filed. There is less than 1 month until the big deadline.
All right, so grab a pen, get some paper, take some notes. We're going to get you ready and prepared for you to file your taxes and get the most out of your return with accountant Kevin Brown. Good morning, Kevin. Thank you so much for being here.
Morning, pleasure.
Preparation is key, of course. My husband's always screaming at me to get all my paperwork together to get it going, and it's so daunting for me.
Yeah.
What are your tips just to get started? Is it starting with all the W-2s, I guess?
It is. Your husband's right. So
what are you doing to me?
You do need to get organized. I think it's the key to making sure that your tax returns are accurate, correct, in that sense. So yeah, like go through your paperwork, look at your online portals, get your 1099s, your W-2s. If you've got a mortgage, your 1098. So really, we're only 3 weeks away now, essentially, but it's getting organized, getting all your paperwork in line is key to make sure your taxes are filed appropriately.
Oh,
so.
and not forgetting that if you're contributing to things like your child's education, those can be included.
Exactly. So like if you're contributing to a 529 plan for your kids, like for the future, their college education, make sure you provide that to your accountants. New York State doesn't necessarily get a deduction for that within the state rules, but make sure you provide them everything because tracking that is key in that regard. There's child tax credits and income tax credits, both at a federal and a state and city level, so those of us here in the city, it's the good credits to get, so yeah.
And what other things are there for you in addition, being in New York specifically? We're talking about child's education.
Yep.
What about things for work? Your commute to work, you can sometimes write that off, right?
Sometimes it depends on your personal circumstances. So a lot of us, a lot of people work from home, right? That's their office now. So if you have individuals and they have their own businesses and their main office is their home, in essence, if they're commuting in for meetings, potentially you can take some of that commuting as a deduction.
But then speaking of working from home, can you write off part of your rent? How do you do that? When you live in the same place that you work?
Potentially you can do that. It's a sticky grey area with regards to doing that. But the IRS have said that there's a possibility to be able to take those deductions depending on how much of the space you use 100% of the time for your work, which when you're living in New York, you've not got much space in the grand scheme of things.
So a lot of people get paid on things like Cash App, Zelle, Venmo, right, for services provided, say like a dog walker or whatever.
Right.
Can you clarify what this $600 rule is?
Sure. So like the $600 rule is if you're receiving more than that $600, in essence, then those Cash Apps, they should be reporting on a 1099 the amount you receive.
That $600, is it at a time or over the year?
Cumulative.
Oh, see, okay, there you go.
Yeah,
okay. So if
and the onus is on those Cash Apps, those Zelle, and those to essentially collate the data from you, who's receiving it, which they should have already.
But how do you know? How do you prove that somebody's getting I guess a salary on a Zelle or a Cash App?
You don't sometimes,
in
essence. So it depends on what they're receiving for those services, essentially. So, but ordinarily, a lot of these Cash Apps, you are looking at getting 1099s from the apps that have paid you those or where you've received those funds.
Gotcha.
And New York has a free online tax filing program, right?
They do. They
Does that benefit everybody?
Everyone. Anyone and everyone can use it. So New York State City have a free online filing program. Some people can use that. I think within New York State, New York City, talking about some of the deductions and credits we were referring to, their online portal may not prompt you particularly to kind of take those credits and deductions. So it may be, if you're looking at obtaining your most tax-efficient tax return that you're going to file, it may be worthwhile speaking to an accountant or an advisor or someone you already work with in that regard to kind of make sure you're maximizing your credits.
A lot of people got returns because of pandemic relief programs and incentives, right? And a lot of those have since expired. We're 5 years since the pandemic, right? So do you expect a lot more people are going to owe this year rather than getting a return?
I wouldn't say so. I think those credits, those reliefs have kind of expired probably a while back now in that regard. So I don't envisage many taxpayers having too big a difference between last year and this year with regards to whether they owe, depending on their income and their deductions, really.
Right.
So,
what is that income level that kind of changes things when you see in terms of returns versus owing?
It depends. Again, it really does depend on the type of income that people were receiving. And also, as you go up that income level, your tax bracket starts to increase. And it kind of depends if you're a W-2 employee. Usually, most of your wages have been withheld.
Right.
Hopefully, withheld correctly. We do have some situations where they have been under withheld, and there's a bit of a surprise for some of those clients. So.
That's always something to think about now, this time of year. Once you get your tax return or your bill,
Yep.
you want to go into your HR program at work, right, and make sure that you're withholding
Correct.
the most so you don't actually end up owing this time of year.
I say this like to my friends as well as my clients, like probably tell them on this Form W-4, claim the lease exemptions. Kind of, yeah, you may be paying to New York and IRS a little more in advance, but you get to get that windfall at the end when you file your returns.
Right, exactly.
For any parents watching, we were all actually just talking about summer camps and what we're doing this summer with the kids. Can you clarify the rule for parents and childcare and what they can actually write off?
So a lot of the childcare credits are income dependent. So really they're targeted at low-income households ordinarily. So if you are a low-income household, which is usually, I think it's around $60,000 to $80,000 a year, essentially, in that instance, then those families can get credits, can essentially get tax credits back from both federal government as well as state and city governments in that regard. So those summer camps and what you're paying for that ordinarily doesn't contribute to whether you can kind of take a deduction or not.
All very interesting. April 15th, here we come. Kevin, great to see you.